Hello, with me today I have Carlos Hardenberg, co-founder of Mobius Capital Partners and portfolio manager of the Mobius Investment Trust. Now, Carlos, the Mobius Investment Trust invests in emerging and frontier market equities. You look for businesses that are mispriced, but radical policy changes are difficult, if not impossible, to predict. Now, some say recent interventions by the Chinese government to curb the power of certain businesses, including Alibaba and Tencent, have made China uninvestable. Now, have they made it uninvestable, and have they made you rethink about investing in China at all?
Well, I think investing in China was always challenging. It was never a place where you met the same investment standards, the same transparency standards. Also, obviously, you are investing in a country where there is a different set of rules and regulation, and it is sometimes quite challenging to understand them and to stay ahead of the curve. On the other hand, China provides a lot of stability, and it is not impossible to forecast the steps of the regulators, not impossible to forecast the policies. They're actually quite rational in most cases. And the institutional sophistication in China has improved quite substantially over the past decades. So I think while the recent regulatory changes are certainly negatively impacting quite a number of large businesses, such as Alibaba, you named this one, but there are actually quite a number of them. I would certainly not conclude that China is uninvestable. In contrary, we think China offers a very diversified set of opportunities in many different sectors, in the consumer sector and healthcare. There are lots of very innovative businesses in China. There are lots of new businesses in China which have become available. The Chinese government is very interested in promoting local champions and creating a competitive and successful domestic capital market. So I do not think that I would get anywhere close to writing off China as an investment destination. You have to be careful. You have to search very, very cautiously. But it doesn't mean that it's impossible to successfully invest in China.
Okay, I mean, you currently have over a third of the portfolio in technology companies and around 14% in China. Does that include Alibaba and Tencent, who are your two companies are badly affected by that government intervention?
We have not invested in any of the large technology companies, nor in any of the large Chinese companies, as a matter of fact, and also not in state-owned enterprises, etc. So as you know, most of the emerging market funds, they all hold the same. They all hold the large index names, Alibaba, Tencent, etc. We have a very different mission, and we have a very different investment process and philosophy. We are looking for medium-sized businesses which are highly competitive, which have a strong niche, which have a strong brand name, which follow the rules of transparency that we expect. In many cases, these are family-owned businesses or family-controlled businesses, or businesses which have a large private equity investor. In China, we've been very, very careful. We've been doing a lot of work in China over the last 3 years in order to find the right investment opportunities, pairing a strong business model with a strong balance sheet and very strong execution, and making sure that the risk-reward profile is intact. And we found mostly businesses that operate out of Hong Kong. We've got a healthcare provider, relatively small, which very successfully operates also in mainland China. They have diagnostic clinics that they operate. Or we invested in a business which is running a large restaurant chain in China. Again, this is managed by an international set of managers, including Western managers, and they are also listed both in the US and in Hong Kong. We stayed away from the VIEs, and we tried to be rather conservative in China. Asia has so much to offer. I don't think one should think only of China when thinking about the opportunities in Asia or in emerging markets per se. We think that both Korea and Taiwan, but also wider Southeast Asian nations, have a lot to offer, and in many ways they are benefiting from the more difficult scenario that some businesses experience in China right now, from, of course, higher cost of running businesses, from higher regulatory costs, etc., but also from the preference as it is kind of perceived from the outside world when they're making investment decisions. We see that a lot of other Asian nations are benefiting from this right now.
Okay, you say you've done a lot of work in China over the past few years, but have you found that engaging with companies in the country more challenging than other emerging market regions?
I would again not generalize. The engagement is really a function of the ability of an individual management team or a board or a controlling family, of their ability and willingness to engage. And you may meet such families or such investment opportunities in Brazil, in Turkey, in Africa, in China, and Vietnam. And in the same places, you have others who are not open to this concept. So it's really about identifying the businesses which have a strong culture, which are interested in working with all stakeholders, which understand the importance of this. And there's plenty of academic evidence which points to very strong long-term outperformance in businesses which are open and which have improved their transparency, their governance, and their ESG standards. But not everybody is subscribing to this. In China, I would say if you just look at the number of opportunities, there are close to 3,000 listed stocks, which are actually in the Asia market alone, which have daily turnover of more than 10 million. As I said, there are tens of thousands of listed companies. Of course, it is quite challenging to find those, and it requires a lot of on-the-ground network. It requires a lot of, you have to do your own homework, work with local experts. We have Chinese members in our investment team, but we work also with a lot of external experts who help us. And we've done this in the medical sector. We've done this in the consumer sector. We're currently looking deeply into the technology offering in China. And there are quite a number of very attractive businesses there, and there's no question. You have to be a bit more patient. It's also, as I said, it's a cultural development. And often at the beginning, some of the Chinese management teams, they think about, preserving their competitive edge, and by not speaking to others, they think they are good in doing so.
Well, yeah, I mean, you talk about corporate governance and ESG, environmental, social, and governance. How's progress on that been? Is governance and transparency changing for the better across emerging markets? I mean, historically, it's not had a great reputation. So things are improving?
Well, I think the good news is that we had a sufficient number of very large scandals. And those scandals themselves were all opportunities for countries to think about policy frameworks, mechanisms of oversight, rules and regulation, which companies have to adhere to, and a clear playbook which is introduced. And we've seen this in almost all markets. Some are more advanced than others, but overall, the learning never stops, as we can see, even in some of the most sophisticated industrial nations in the West. You are constantly seeing yet a new scandal around governance, or accounting related disasters. So this is not exclusively reserved by emerging markets. But I would think that the whole concept and understanding of thinking not just about governance, but also thinking about environmental standards, environmental issues, socially related subjects, culturally related subjects. They are much more the center point right now of attention. Companies begin to realize that it relates directly or impacts directly their cost of capital. In other words, they can lower their cost of financing, facilitate access to the capital markets if they're perceived as good citizens, so to say, and they get a high rating. And simultaneously, you're seeing that a lot of, as I said, there are a lot of local initiatives that push for this. And some of the biggest scandals in emerging markets over the past 20, 30 years were not necessarily in all cases accounting related, but often they were actually related to environmental issues. Think about some of the gigantic fines you've seen in places like Brazil, but also in Indonesia and other markets. And companies realize they have to get that right. So we're seeing overall a positive improvement.
I mean, Interactive Investor is campaigning for greater transparency regarding fund managers' investments in their own funds, it's skin in the game. Carlos, do you own a stake in Mobius Investment Trust?
Yes, Mark and I have been actually founding, not just founding partners of the business, but also seed investors in our own strategy. And both of us have a significant exposure, which is also visible in Bloomberg and other public sources.
Fantastic. Carlos Hardenberg at Mobius Investment Trust, thank you for joining me today.
Thank you for your questions and thank you for speaking to me today. Much appreciated.